The bill seeks to establish Nigerian Fintech Regulatory Commission, a regulatory body that will oversee and regulate the rapid growing fintech industry in Nigeria. The need for this regulation has grown exponentially in recent years, with millions of Nigeria relying on digital payment platforms, mobile money service, and other fintech products for their financial transactions.
Hello, and welcome to Business Policy Roundtable, the show where we break down the laws, regulations, and government decisions shaping how business gets done across Africa. Today on Stakeholder Brief, we're turning our attention to Nigeria's fintech space, one of the most dynamic and fastest growing on the continent, and a new development that could reshape how the entire industry is regulated. The Nigerian Fintech Regulatory Commission bill proposes creating a single regulator to oversee all fintech activities in the country. That means everything from payments and lending to crowdfunding and crypto, all under one umbrella. Now, what does this really mean for the thousands of startups, investors, and financial institutions that make up Nigeria's fintech ecosystem? Is this the clarity the industry has been asking for, or could it create new bottlenecks for innovation? To help us make sense of it all, I'm joined by Chimgozirim Nwokoma, one of our senior reporters here at Techpoint Africa. Chimgozirim has been covering Nigeria's fintech landscape for more than 4 years, tracking policy shifts, funding trends, and the players driving the country's digital finance revolution. The House of Representatives recently approved the Nigerian Fintech Regulatory Bill for its second reading, sponsored by Honorable Fuad Lagoda, representing the Surulere Constituency 1. So can you tell us what the bill is all about?
Okay, so I guess I'll start with sort of the goal for the bill, which is to unify regulation for fintechs in Nigeria. So the bill covers quite a number of things. There's competition, so regulating how competition works. The bill talks about creating an environment for fair competition for all fintech startups. It also focuses on competition. No, I said competition already. It also focuses on like consumer protection. So how do these entities treat their customers? How do you treat like customer complaints? How do you respond to them? How quickly do you do that? It also covers licensing, obviously, which is like I wouldn't say it's the primary thing, but that's sort of where everything stems from. So it covers licensing, from licensing requirements to licensing fees. It also covers like the range of activities, covers compliance costs or compliance requirements as well. So like, I guess in a nutshell, that's sort of what the bill covers. We might go into specifics if you have questions like that.
Okay, thank you very much for that explanation. So I know that a primary thing from the bill is that it wants to create a general regulatory body for fintechs in Nigeria. And that means it will now take on the role of everything the CBN was doing, the SEC was doing, the FCCP was doing, because you just talked about consumer protection. Mm-hmm. Do you think that that's something that one body can do? All of these things that all these bodies have been doing, put under one single regulatory body?
So I think the question should probably be, should one body be doing that? Okay. Because obviously one body can do that. All you really need is have the right manpower, have the right setup, and you'd be able to do that. So to answer your question, yes, one body can do it, but should one body be doing that? Everyone has different, so like you've mentioned, with the current regulatory environment, we have at least 5 bodies that regulate the activities of any financial service provider in Nigeria. So there's the SEC, there's the CBN, there's the FCCPC, there's NITDA, and they all do different things. So yeah, everyone does, they have different remits. The SEC is definitely investments, banking, you fall under the CBN. When you now start talking about how do you protect my data, how do you treat your technology, then that falls under NITDA's purview. When it comes to consumer protection, obviously the FCCPC takes the lead on that. So I guess the question, like I said, is why do we really need one body to do that? So the argument here is that there's fragmented regulation. Yes, there's fragmented regulation. If you started a fintech today, you probably need more than one person. You definitely need more than one person. Just from the names I've already mentioned, you need NITDA for your tech, and then you need the FCCPC. you probably would need either the SEC or the CBN at some point, and there are quite a few other bodies. So yes, there's a fragmented regulatory environment, but do we solve that problem by creating a unified regulatory environment? I do not think we should be solving that problem by creating one regulatory body, because it throws up a few questions. And one question I've asked myself is, what exactly is a fintech? Because again, that informs everything you do. Fintech is simple, financial technology, which just because of the way we've built or viewed that industry, it feels like it's any young startup or business using technology. But when you look at it, it's simple, financial technology. Your bank definitely has a bank app. Does that make them a fintech? There are investment houses today that now have bank apps, or that now have applications. Does that make them a fintech? Right? So how do you distinguish that? We've seen banks that have gone on to like spin off fintech subsidiaries. Does that mean that the fintech subsidiaries are now going to be regulated by a different entity, while the while the parent company gets regulated by a different company? So again, what is a fintech? Knowing what a fintech is should be what informs how you regulate them. Yes, there's the argument that right now it's a bit like you have to deal with quite a number of people. But I think what we should do is, how do we streamline all of this and make it easier? Not necessarily by creating one body, because we talk about this quite frequently. Nigeria's problem is hardly a new regulation. It's usually how do you enforce the existing regulations, or perhaps make them more effective. So no, I do not think we should be having one more regulatory body.
Wonderful. Thank you for that. And speaking of if we should be having one regulatory body, I want to talk about the possible pros, right? Because I think a lot of the conversations that have come up have spoken about how it is going to reduce the bottleneck that fintechs often have to go through when they want to when they need to do regulation and compliance.
Yeah.
So what are some of the pros that you think can come out of this? Even if you think, oh, one body should not be doing this, what pros and what cons do you see coming out from this?
Okay, so the obvious pro is you have to deal with just one body. That's the obvious pro, or the obvious benefit to that regulation. You do not have to deal with multiple agencies. When you're setting up, in the process of running your operations, you just have to deal with one body. And that's, I guess, the only benefit I really can think of right now. But then to the disadvantages, let's just try to think 10 years down the line when you grow really big. So someone starts out today, they're a payment service provider, and then tomorrow they decide to tack on a wallet. And 3 years down the line, they decide, you know what, perhaps we should do digital banking. Are you still a fintech at this point? Or are you now a digital bank? And if you're a digital bank, what does that mean for how you're regulated? Because now the CBN can now make an argument that you're providing, which is accurate, you're providing banking services, and so you fall under our purview, and we should be the ones regulating you. So what you end up doing, perhaps without knowing, is that you are creating the same regulatory bottlenecks either today or further down the road. Because the CBN is going to ask, I've been trying to look at like the constitution of the body, and they do not really make mention of the CBN coming in or all these other agencies. So what happens when you start providing services that the CBN already regulates? If you say you're regulating fintech, right, it feels like a fool's errand to me, because when the technology is not the business here is the finances. So when you start providing banking services, is the CBN supposed to sit back and watch you? Is the SEC supposed to sit back and let you run? So it's a bit tricky, right? Again, like I said, the major disadvantage here is that you risk creating one more body we do not need, probably create a few more jobs for 10, 15 people, or as many people, well, obviously more than that. Just create a couple more jobs, tens of jobs that you'd create. But further down the line, you risk having all these regulatory agencies pitted against each other at some point.
Thank you. That's interesting. And in the past, some stakeholders have said that if there was a single regulatory framework for fintechs, it would help create a level playing field in their competition with banks. Yeah. Is that an assessment that you agree with?
Uh, to some extent, I think I understand where that sentiment comes from. And that stems from the belief, whether real or perceived, that the CBN is, in the way it's currently set up, it favors banks heavily over fintechs. So there have been whispers in certain corners that certain regulations are designed to sort of keep banks in the game. So that's where I believe that those thoughts are coming from. The fact that they feel that the existence of the CBN, for example, and its long affiliation with banks positions them to just favor banks much more than they would do fintechs. But to your question, would this create a level playing field? I don't think it does, because all it does is take care of your regulation, right? You'd still have to get into the market, because I do not believe that regulation is the sole reason why there isn't a level playing field. Are you not going to run into the same problems? I mean, for example, banks have similar issues, right, with the CBN, where it feels like some of the regulations may not be the best, right? Would you also not run into similar issues? What does a level playing field really look like? It's not like the CBN outrightly says you can't perform X service if you're not a fintech, or if you're a fintech. What they only say is, oh, in order to perform this service, you need to meet X requirements, right? So I think to a very large extent, we have a level playing field. So I do not really think that a unified regulatory framework is what creates that level playing field.
All right, thank you. And I think another part of the bill, another thing the bill covers is ownership of companies, ownership of fintechs. And it talks about how it wants the fintechs that operate in Nigeria to also have Nigerian owners, at least partly Nigerian owners or partly Nigerian management.
Yeah.
Do you think that this is going to affect the foreign companies that want to expand into Nigeria?
So I think all of us know who that part of the bill is directed at. I have a problem with protectionist policies, because they don't end well, right? 1 minute you're protecting the companies in your country, the next minute the countries your companies want to expand into is wielding the same stick on you. So I just do not like protectionist policies. What you should be clamoring for isn't necessarily Nigerian ownership of fintechs, but how can you make it easier for your people to set up those same companies? So again, let's just look at what makes companies win. It's either that they have a very great understanding of the market, or that they have great timing, or they have a lot of money. So you can't exactly legislate against understanding of the market. If a Chinese person understands your market better than the locals, it's not their fault that you failed to understand that market. If they have better technology than you, how do you want to protect against that, right? If they have much more money than you do, then perhaps you should be asking yourself, how do I get more money into the system? Which the bill talks about. Talks about like figuring out ways to get more investment into the fintech sector in Nigeria. So I would say, rather than you trying to create laws that say a specific ownership level should be kept for citizens of the country, perhaps you should figure out a way to make competition in that industry easier, or make innovation much easier, not necessarily trying to stifle growth. Because again, let's look at a more recent example, which is Starlink and the South African government. Starlink has been trying to get into South Africa for a while, and one of the reasons they haven't been able to set up shop legally is they have issues with the protectionist policies. They may not call it protectionist policies, but that's exactly what it is, requiring that you set aside a certain amount of ownership in the company for South Africans, Black South Africans in this case. Now, while it looks like there are good intentions behind that, oftentimes it makes companies take a step back. We do not know how much. So when you think about it, like South Africa, Starlink has made the argument that I think a 30% ownership is a lot. Because typically what will happen is you would ask them to, what's the word now, have a specific, you would want them to have a specific capital contribution to the company, which, while it might give the locals a stake in the company, they may not always have that money. So if the company expanding into your country does not have the patience to wait until someone, or maybe they do not have the networks to find someone who has the capital and who even believes in the industry enough to invest. So like there are a lot of things that ultimately influence whether I decide to set up shop with a partner. So like I said, I have a problem with protectionist policies. I think you shouldn't be pursuing them. But yeah, the bill is still at second reading, and my big hope is that some of these things, if not the entire bill, do not get passed.
All right, thank you for that. So I think I want to talk about the compliance requirements, right? A part of the bill requires startups to have a compliance team, legal and compliance teams. And I think that although fintechs would often have compliance teams, it's mandatory. It's something that they should have, right? But smaller companies that are just starting out may not see it as important to set up like a compliance team. They may not have the budget for it. They may not have the financial capabilities to carry that. Do you think that this could be a factor that stifles the growth of smaller companies that are just starting out?
So like you've pointed out, for almost every financial service you have to render, you need a compliance team. So whether that person is in-house or whether they are a consultant, it's you choose what works for you. But to some extent, I wouldn't say it will stifle your growth. It might make you think a little bit harder about how you go about growth. So compliance is not sexy. It's not something a lot of people like, but it's very necessary, especially when you're dealing with money. Whether you're holding my money or you're helping me grow my money, just having that level of assurance that, okay, these guys are doing things by the book is super important. And I would say, while this might look like it stifles growth, it's good. It's good, right? We've had instances where fintechs were clearly making very funny decisions. If they had a functioning compliance team, they probably would not do it. Whether you're onboarding users without conducting proper KYC, or you are running a bank like you're running a lending company without proper banking controls. If you have a proper compliance team, I believe you should reduce those instances. Of course, it's not a silver bullet that would eliminate all these problems, but I believe it reduces instances where you run a fintech, but you do not treat it like a fintech. I mean, banks already, of course, you could say banks have, like, they're not as capitalized as fintechs. You can't compare. But banks have had to figure out compliance from day one in order to run. So I think it's fair that fintechs are required to do that. I mean, to a large extent as well, if you're operating right now, you have certain compliance requirements. You have certain compliance requirements. So they're not necessarily coming up with things you do not already do. Perhaps they might be stricter than the existing regulators are, and that's another problem. Would they be stricter? Because there are, for example, those who use very funny methods to recover loans. That's something compliance, stronger compliance requirements, for example, should fix. So, no, I do not think it stifles growth. I think it just improves the quality of service that we, the customers, get.
All right. And lastly, I think I want to talk about the inflow of investment into Nigeria.
Yeah.
Do you think that having one regulatory body that fintechs, do you think if fintechs have one regulatory body that they have to deal with, that it will encourage investors to come into Nigeria, invest in the fintech ecosystem in Nigeria?
If fintechs figure out how to make money, then they would always have a lot more investors coming in. Having one regulatory body helps because in an ideal world, it signals regulatory clarity, right? So you do not have to deal with too many requirements or too many bodies. Yes, So in that instance, it could help. But from what we see, it's not necessarily regulation that is slowing down investments into the sector. It's just the business sense or the business case for the sector that has sort of slowed down investments. Can the existing fintechs in the country make enough money to attract these investors? If they can, they would get investors. So no, I don't think these. I mean, again, the the bill talks about attracting investments. I would be really interested to see how they plan to do that, but no, it's not going to. It's not going to limit or improve investments significantly.